All right, guys, what's going on, everyone? Paul Singh here. I know it says Kanal right there, but it's me for our stocks and coffee. We're going to do one today. We're going to do another one next weekend. I got my morning next Saturday clear, so we'll get together again. Lots been going on in the market, so it's good to do these. Let's do our shout outs. Let's see who's in here, and of course, if you're drinking coffee or whatever you're drinking, what you're drinking here. I got my usual Caribou coffee, which is my favorite. AP, what's going on, and where you're from as well, if you want to put that in there as well. Indo, what's going on? AP, we got Randall. Tim, what's going on? Tim is, I think I've got this memorized. Tim, you're from Chicago. What's going on? Charlie, how's it going? Charles, from MD, enjoying retirement. He's got his French roast. AP, what's going on? Carter, all the way from Thailand. First international. I'm sure we'll have a lot of international members in here. What time is it over there? My guess is it's probably around 3 or 4 in the afternoon, maybe later than that. Jason, what's going on from DC? Abilesh, what's going on? We got to connect soon. Brian, what's going on from Vancouver? AP from Austin. Zameen from Manchester, UK. We've got Alex from LA, not too far from me here, drinking Lavazza. I really like Lavazza. Lewis, what's going on from Florida? We got Gus from Memphis, Randall from St. Louis. I think I'm skipping a few people. This thing's moving really fast. We got a big turnout this morning. Araya is asking, will this webinar be recorded? Yeah, I'll record it and post it up on I think it'll be my personal YouTube, but I'll probably post a link in on Twitter. So take this if you're not following me already. It's Paul J Singh, X, Twitter, whatever, and I'll post the link there. Dennis, what's going on, my buddy? He lives about 10 minutes away from me. We gotta connect, Dennis. Maybe for sure Monday or Tuesday. Anu, what's going on from New York? Oh, 10:30, Carter. It's late over there. All right, you're staying up for us. Michael in Indy. We got Shill in where is it? It's moving real fast. Shill in looks like Connecticut. Uh, Jim from NJ. Interesting way you spell Jim. Uh, Anu's drinking his apple and ginger tea. Brent from Alabama. You haven't missed anything, Brent. We're just getting started. Joy from LA, but visiting SF. I'm from San Francisco. You live close to me in LA. I'm in San Diego, and I am from the Bay Area. All right, lots to talk about today. It's been, and every week we've got a lot of interesting stuff going on in the market of late. Let's get started. We're going to do what we normally do. We always start with what's going on in the overall market. That gives us a good general idea of how aggressive we should be, what direction we should be trading, whether it's longs or shorts, more whether we should be hedging, and should we be slowing it down or should we be pushing it? So we'll start with our market analysis. We'll talk a little about a few areas that are picking up that were getting hit before, and always love when that happens, and that's a good sign for the overall market. Let's review big tech earnings and what the stocks have done. Essentially, we've already reviewed big tech earnings last time, but we'll see what the stocks have done since, because a couple of these are setting up for really nice setups. We've been getting a little aggressive in big tech, which we pulled away from for a while. And then our stocks on watch. And those of you who are swing report members know that we've got a Focus 40 list of stocks ever since the dip in the market. We're looking for essentially the new leaders or some of the stocks that we're leading that are continuing to lead. And that always happens when you get these big meltdowns. The stocks, what was working before tends to change. We get some new leaders emerging out of this, and some of the old leaders will continue to lead as well. But you want to reanalyze what you were looking at here. So we've got what we're calling our Focus 40. And I just want to, I'm not going to go through the Focus 40 in the entire thing. We do a lot of that in the swing service, but I want to show you guys some important stats that you should be looking at as these stocks become momentum stocks. All right, let's get started. And of course, as usual, if you guys have any questions, post them in the chat here. So let's get started. Now, we talked about this while this was happening when we were getting the big meltdown, and I've just kept this on for each of these little stocks coffee lessons we've had because it's an important thing to remember. And you guys who are new to trading, especially, or maybe haven't experienced the depth of something like this, there is the idea that this too shall pass, that when you're in the middle of these, it seems really scary. You hear all this doomsday stuff, and there are often reasons for this to be happening, but they always pass. One of the we thought, or many people thought, the world was ending here, maybe, right? And we were having this potential dystopian future. And look what happened. We had one of our biggest momentum runs after that, right? If we go back all the way to 2008, when we had the big real estate mortgage meltdown, and bigger, even a bigger crash over time than the pandemic crash. Look what happened after that. Market came back. So always keep that kind of attitude in mind, because it will help you with your trading when you know that. Doesn't mean it's always going to happen this quick, or what happened in 2020, how quick that was. 2008 took longer. We really didn't come out of it till 2009. But the point is that these things do pass, and we want to have kind of a good mindset related to this, no fear, and then just make good decisions and analyze what's happening and make our trades. So let's do that. Let's analyze what happened. And it all started, I can't remember if we had a Stocks and Coffee around this time, or if it was just in the swing report, but we were talking about this as this was happening, that while a lot of people were scared when we were getting these big pushes, these big meltdowns, a lot of people were continuing to short in here. And we were like, step back. Let's get market neutral at this point. We see the huge volume coming in on big gap downs when we're already extended to the downside. That is often a signal of capitulation. And at least for the time being, usually that's the big sell-off, and the market will stabilize or bounce at least for a little bit. And that's what happened here. And then we got the little bounce. Now, you don't know at this point, is the bounce sustainable? Are we going to get back on trend? And we don't still 100% know. But we knew a bounce was in play, and we started taking some shots in here that worked out. And then when this is happening, you look for clearance for each new resistance level. You can see here, the first thing was, and here's the big volume we were looking at. We had the big meltdown here. And the first real resistance level for us here was this gap here and the 9 EMA. And you can see the market tested this level, then cleared that level. Then the next major level was this open gap here, which corresponded with the 50-day moving average. We recently about a week and a half ago, broke that level. And with each of these resistance breaks, we assess market breadth. And what we noticed was the universe of stocks were improving as well. We were seeing more interesting stocks to trade. It still wasn't a booming list, but it was getting better. And market breadth was improving as well. And we've got over here like different kind of market breadth indicators that we look at. So that was all improving as this was happening. So those were good signals. We went from neutral to slightly bullish to more bullish. And when the 50-day moving average broke, that was obviously really good. And we've been making our trades with those momentum stocks through here. The emerging or new market leaders, PLTR, Hood, DeLongo, and so on. SFM is when we were trading Roblox and Spotify. We traded as well. And now we are getting this consolidation range in here. We essentially had 9 or 10 up days in a row here, which doesn't happen often. If you pull this thing out and look for how often you get 9 or 10 trading days in a row that are green, it's not a whole lot. And when that happens, there's generally a pullback or consolidation. So we were expecting that. We lightened up a little bit, and we've seen this consolidation emerge here. Now, now we have one more major resistance level to get through before we say, okay, we've essentially invalidated all this bad news and we are back on trend. And that is getting up over the 200-day moving average. 200-day moving average is a very important level. It is a level that the institutions watch. So you can see there's been kind of a stalling and a back and forth in this range, which is very healthy. We don't want this thing, as nice as it is for it to go up in a straight line, especially if you're in positions. You really don't want that to happen. After a big run, you want some back and forth, some consolidation. It's good for position building. And it's just overall healthy for the market. You can trust the next move that happens a little more than if we get too extended. And that's exactly what happened here. We've had some news events through this period, some market data coming out, and then the Fed. We got the Fed out of the way. That was Wednesday, and having that out of the way is a good thing. Now we don't have to worry about some major news event coming out related to the Fed that's going to, tank the market. So you can see it's been a healthy consolidation in a tight range above the 90 MA and under the 200-day moving average. This is very good. So now what are we watching for? Obviously, the remount of the 200-day moving average. And in terms of if the market continues to consolidate or pull back, I think it'll be healthy as long as we hold the 50-day moving average, or maybe even dip a little bit below that. We're still, if you think of the context of where we've come from here, that would still be all right. If we start to break down, maybe down here around 540 or so, then it's concerning, and we may even think about establishing shorts. But for now, we are bullish and looking to build positions and then watching for the remount of the 200-day moving average. But again, that could change very quickly. We have to be adaptable. This is a very news-based market. If something happened and maybe some Fed head came out and was really concerned about inflation, or if something happened with tariffs that was really negative, it's been more positive news of late, and that has helped here as well. That could obviously impact the overall market. So that's where we are right now. In terms of the market, essentially consolidation at resistance levels, healthy action. Again, we have the Fed out of the way. Now, speaking of the Fed, a quick review of what happened during the Fed meeting. Basically nothing in terms of what they did. They just kept rates where they were. But everyone knew that. The key was what is in their commentary. Do they seem really concerned? Are they indicating rate hikes in the future? Are they indicating rate cuts in the future? And they basically indicated none of that. Basically, we're data driven. We're going to continue to watch, wait, and see. It was a little more dovish or negative compared to the last meeting. But what they really made a point of, and this is what everyone's watching in the market and what you should be watching too, there are two competing interests right now. Before, unemployment has been good through all of this up until 2025, essentially since all this tariff news. Unemployment has been very good. Now, unemployment is becoming a concern, and the Fed mentioned that. And there are two competing interests in terms of what the Fed is going to look towards. If they look towards inflation, they could potentially raise rates or at least keep rates paused where they are right now. Obviously, the market wants rate cuts. Market was looking for indications that in July would they cut rates, and they gave no indication of that. But if the market is more concerned with inflation, think of these as two competing interests. If the market's more concerned with inflation, either rates, continued rate pause or even rate hikes. And obviously the tariffs could impact inflation and probably will. If they are concerned with unemployment, which tariffs are also impacting, if they are more concerned with that, then we could get rate cuts. The market would love that, obviously. So these are two competing interests. The market is really looking at which way is the Fed going. Are they going towards inflation? Are they going towards unemployment? And they gave no indication. They mentioned both. They said they're both concerns, but they didn't give any indication of which way they were leaning. So that's why we didn't get an explosive move in either direction. And it's just good to get it out of the way now. If they had indicated we're more concerned of inflation, we'd probably be down here right now. And if they had indicated we're more concerned with unemployment, we'd probably be over the 200-day moving average right now. So the point is, we don't have to pay attention to that right now. I would pay attention to any of the data that comes out related to CPI, PPI. Those are inflation related, and a few other ones, and then unemployment numbers too. The market's going to be very sensitive to those over the next month or two. So watch for that. We could probably on those days we'll probably get some big pops and some big drops related to what those numbers are and how they are related to expectations. So something to pay attention to. But as usual, we are not economists. We're paying attention not to the actual data, although we'll look at that and look at the headline. What we really want to see is how is the market reacting to that. So watch the price action around those days when we get those unemployment numbers, when we get the inflation numbers. All right. And outside of that now, related to the market itself, um, we're noticing, and I talked about market breadth, the universe of stocks and how those are doing. We're starting to notice that speculation is back. These kind of risk areas are making comebacks. We saw a lot of that this week. Two areas that you can watch very closely to get a good clue for that, or we'll say three areas: quantum and AI, and then consumer discretionary areas. So if we look at quantum, we'll just pull up QTUM, which is a quantum computing ETF. Notice how strong it is. It's stronger than the market right now. You see here, the 50 never did cross below the 200-day moving average. And you can see here above the 200 and above the 50, which the market is not. So quantum computing is showing relative strength to the market, and it's a very nice pattern, almost getting close to all-time highs here. So we have strength here in quantum computing. And then if we look at AI, we can pull up RD here, which is an AI ETF. Not quite as strong as quantum computing, but has made a very big pop from the lows here in April. And you can see where it is right now next to the 200-day moving average, again, showing a little bit of relative strength to the overall market. And this has been a bigger percentage gain than the market has. And if we pull up, I just keep my own list. You can look at these ETFs. I keep my own list as well. Here's a list of AI stocks, and just flip through them, and you'll see a lot of improvement in these areas. Look at QBTS, near all-time highs. Yext, while not near all-time highs, the overall pattern has been decent. And we can just go through the list here, and you see a lot of improved stocks here. And then we can pull up quantum list that I have here of quantum computing stuff, and same thing. We're seeing a lot of improvement in most of these stocks here. So two areas I would definitely be paying attention to for a couple of reasons. One, just for trades. These are good charts and stocks that you can get good trades out of. And two, it gives you a clue in terms of how risk on or risk off the market is, and it's getting more risk on now, which is obviously good. And then consumer discretionary, which is essentially retail. When people have more money or are less concerned about the economy, they're going to spend more, and they're going to spend more on discretionary areas like retail. So we've seen a nice comeback in retail stocks. Here's XRT. The chart doesn't look quite as good because XRT, if you think of retail is just a huge area, right? You have more speculative retail with the big box guys like Costco and Target. Auto sales and clothing stores. So very different type, and grocery stores. So very different type of retails in here. So I have my own more speculative retail list that I keep, which is what I call specialty retail and apparel. And if you go through this, you see a lot of improved. Some of them I've been pulling up aren't maybe that great, but if you go through this, you see a lot of improved charts here in this area specifically: specialty retail, online retail, apparel stores, more of the kind of not the big box, but the mall type stores. You see a lot of improvement in those stocks. So another area that's one, an area to get trades from, and two, a good indication of where the market is at. All right, and if you guys have any questions, you can post them in here. And if you got any tickers or stocks you want me to take a look at, you can post them in here as well. Now let's do a review of the big tech stocks. And we'll start with two of them that we are in. We got into Tesla here. We've been waiting for the move above the 200-day moving average, and it did that on Friday. So that was our clue here. Now, what's interesting about Tesla is, and I think we might have talked about this in the last Stocks and Coffee, but when it had earnings here, it had horrible earnings. Its revenue growth decreased by 70% from the previous year. So if you just knew that, I mean, it had horrible earnings, you would think that it'd be gapping down and doing terrible, but it actually gapped up that day 5% and has continued to do better. That's because not what their earnings were. You know, earnings is past. It was what they were looking up for to in the future, and they mentioned in their guidance that one, their cheaper cars were the release date, I think, is coming up now for those. So the market likes that, that more people will be in that price range. And two, their Waymo tech surface seems to be improving. So because of that, the market has liked that, and you can see now we were waiting for the remount of the 200-day moving average. So much improved chart for Tesla. We've stayed away from it for a while, but it finally got interesting. And anytime you get an earnings that seems confusing when you look at the numbers, like you look at the numbers and it should be doing horrible, but the stock is doing better than you would expect. Always pay attention to those stocks. Any move that doesn't seem logical, there's usually a behind the scenes reason for that. So you should pay attention to that. And then the other one is Meta. And this one has been one of our favorites. You can see pulled back pretty deep, but has been a strong momentum stock for a while. And then after the pullback back has come on strong, has been leading big tech, and is above the 250-day moving average. So has been showing relative strength and cleared these resistance levels. So we like this setup a lot. Here was the earnings breakout, and we have been in this, I think, since early last week. So those are two we are in. We're looking to enter a few others. I like Amazon a lot here. Another one, we like consumer discretionary. Amazon since 2023 has been leading. Look at the nice trend, pulled back very deep, but it's coming back, has not cleared the 200-day moving average yet. So a couple of things to do with this, and it did have good earnings numbers. A couple of things to do with this. One, you can wait for the remount of the 200-day moving average if that happens. Or I think this is one you could potentially even speculate here. Use a little bit of a loose stop, maybe a smaller position size. And then if it breaks a 200, then you could add to that position size. So let's say normally you would trade Amazon with 200 shares or 100 shares or 50 shares, whatever it is. You could maybe take half that and then add to it if it remounts the 200-day moving average. So I like Amazon a lot. Of course, Netflix has been the leader in these big tech companies. The market loved their earnings. They loved their guidance, where they pretty much told everyone we are recession proof, we are tariff proof, that everyone is going to continue to use us. And this is what the market has done since, or what the stock has done since they said that. Now notice here it's starting to weaken here, and which you normally do after a huge run like this. So I would watch here for where it pulls back to, and look for some strength, and potentially enter at that point. Google is one that's a little risky right now. They have a lot of news coming out that's negative, especially related to DOJ. So I would watch this one carefully. And there's a big topping pattern in play here. With these big tech stocks, the topping patterns rarely end up playing out. But when they do, you can get some big runs to the downside, as we saw this topping pattern here. But watch this level closely. And honestly, I wouldn't touch it unless it got up over the 200-day moving average. And then the next, I think Apple is another one that probably want to stay away from now. Very sensitive to tariff, specifically China tariffs, right? So I would be very careful with Apple right now. And if there's some good news related to tariffs, then maybe consider it. And if it clears these ranges, but for now, Google and Apple are off the list. And then NVIDIA still has earnings coming up, so we'll stay away from that one right now. It's much improved, and I would like it over the 200-day moving average, but we probably have to wait for earnings on that one. All right, we've got our big tech review. Now let's go over some stocks that are interesting. Before I do that, let's take a look at your questions. All right. Rahul, will Tesla be a sell the news event before robotaxi launch? First of all, Rahul, you know this. There's no way to know that. You can't just answer that question. We have to wait. We have to see what the price action will be. I would say if it was super extended, maybe at that point there's more opportunity for sell the news, but we'll wait and see what it does. Right now, because it's consolidated so much, I think it's okay. Uh, Howard's asking about BA, possible target at 214. BA had a very good earnings reaction. And BA covers kind of two industries that are related: one, military and defense; two is airlines. And if we look at the stock here, it was really beaten down, and now it is much improved. You can see here has remounted the 50 and the 200 and has cleared this range. If I was in it right now, you asked about a 214 target. That makes sense. There's an open gap here around that level, right around 214. My expectation is because it's so extended, there'll be some back and forth on the way up. So it's not going to go there in a straight line. You'll probably have to ride out some pullbacks and you'll have to hold it for a little bit. But I could see it hitting 214. Had good earnings, a lot of good news, and has cleared this range now. If I was looking at it as a potential entry, I'd probably want to see it pull back here just a little bit to this range and test that range. Brent mentions he likes looking at the groups tab on Finviz. Technology stocks are down this past week. Would that be because of the SPY QQQ pullback? Yeah, the big tech stocks are essentially what make up the weighted parts of SPY and the Q. So they kind of go as those go. So they're going to be very interrelated. Looks like we've got a spammer here talking about Forex. I agree, Carter. A lot of good setups right now. Callie, the AI and quantum computing ETFs I'm looking at are QTUM for quantum computing, and then RD for, there's some other ones as well, but RD for AI. And these don't encompass everything you want to look at. So I create my own list as well, and you might want to do that too. And I'll actually, and some of the ones I use maybe not be pure AI. Like I've got NVIDIA in there, which always obviously does more than and Microsoft and so on, which do more than just AI. But let me post the stocks that I have on my list that you can put in a list for yourself in the chat here. And then here's quantum computing, and you can create your own list then too. All right, one list is AI, the other's quantum computing, and there's some overlap in those as well. Okay, AP wants to look at Oklo, 15% short interest, so obviously a lot of potential for a short squeeze. All right, so big run up, tested the 200-day moving average held. Now testing the 50-day moving average. It's hard to tell when this thing is going to run. And I'm assuming Okla, since it's utilities regulated electric, it's probably related to AI power as well, which is why it has been running so much. Actually, I don't have this one on I have a lot of power stocks on my AI and quantum computing lists because they take a lot of power and they always move with these stocks. So if you look at quantum computing, we have CEG, DUK, EXE, SO, VST, VRT is another, or VST or VRT is another one. I'm assuming this is related to that, so I'm going to just add it to my list here. We don't know when this is going to run, but at the least right now, it provides a very good risk reward, right? You can enter here, place a stop, depending on how loose you want it, under the 50 or the 200, and you can target the top of the range and get a really good risk reward. If it does get some good news, especially with that short interest, it could really pop. Chewy, yeah, Chewy is hitting recent highs here. I do like this one a lot. I didn't have it on my list, but I like it. Okay, Dutch Brothers is on our list. So let's get to good one, Anthony, as usual. Let's go ahead and take a look at our stocks on watch, and we'll start with Dutch Brothers. Dutch Brothers was one that we liked a lot during its momentum run here. It's pulled back deep, tests the 200-day moving average, and is finally back above the 50-day moving average as well. Had obviously a good earnings reaction here. I think it's one that could be entered here. I'd probably use a pretty loose stop here and then target either up here around 80 or the high here around 85. So I like that one a lot. Let's start going through some of our stocks on the list here. Let's start with Hood. You can see here, Hood was a really strong momentum stock. And a lot of the stocks on our list are essentially stocks that were in momentum runs, pulled back, held up well, held up and either held the key moving averages, or even if they violated them and might have had deeper pullbacks, have come back very strong. So Hood was both relative strength and has come back strong, and has already cleared all of these moving averages easily, and it is now on its way to new highs here. So I like Hood a lot. The earnings reaction wasn't great, but since then has cleared that range. So I like Hood a lot. A little extended right now. I would probably wait for a pullback or a consolidation, but this is definitely a stock on our watch. We are in PLTR right now. Notice here, it gapped down on earnings. These strong stocks often will gap down on earnings, even if they have good earnings. And PLTR did have good earnings and still gapped down here. When that happens in a stock I like, I watch for overreactions. And when they pull in, if they pull into the gap, we'll enter them. And you can see that's exactly what PLTR did here. So I really like PLTR. Dulongo broke its IPO high, as you can see here, back in 2023, was on this strong momentum run, and now while everything is pulled back, Dulongo is at all-time highs right now and had a good earnings reaction as well. Too extended to enter, but the point of our stocks on watch is a list of strong stocks that could potentially give us entries in the future. Dulongo is not an entry now, but if it were to pull back and maybe test this range, we would look to enter. PI, another one that had strong earnings reaction. And what I like about this one, notice very different pattern than all the other stocks we've been looking at, which have been strong. This one is weak, but the earnings reaction was so strong that it broke its downtrend that's been going on for almost a year now. So very strong breakout over the 50-day moving average, breaking the downtrend. Definitely a stock on watch. Sprouts SFM, we took profits in this one before the big meltdown here, but overall still a very strong stock. And we want to see one of two things: either how it reacts to the 50-day moving average, or how it if it remounts the 9 EMA. Okay, let's go over a few more of these. You can take a snapshot here. Actually, I'll put them in the chat as well. And a lot of these are on our Focus 40, not all of them. Let's pull up Disney. We've been staying away from Disney for a while, and still it looks like kind of a messy overall pattern, but recently has been very strong. And then you can see the big earnings breakout. There was a huge surprise in their subscription numbers for Disney Plus. And that's what led to this big breakout over these resistance levels. Very strong here. Definitely on watch. Roblox, another one of our favorites here. And you can see about to test not all-time high, which is up here around 140. We'll call this the IPO high. But it broke this major range here. We've traded it through here. And now is looking to break another range here. And I like that it's consolidating under that range. Maybe even anticipation play now for a break of this range around 75. It's at 71 now. And look at how much room there is to the upside for Roblox. Let me look for some that have different setups. CellH has a different setup as well. If we look at CellH here, another one that's really beaten down here, but had a strong earnings reaction and has cleared these ranges and these moving averages here, and a lot of room to the upside. Actually, let me go over one more. We talked about consumer discretionary, and travel and airline stocks have been picking up, an area we should be watching after some ugly charts. Like look at Trip here for travel booking, but had a very strong earnings reaction and has cleared the moving averages. and Sky W as well. Same thing. Has after a deep pullback, is back up over its key moving averages and a lot of room to hit its highs here. So, all right, if you have any more questions, go ahead and post them. I'm going to quickly pull up the Focus 40 here. And if you guys are on FinViz or anything else, let me just pull up a few numbers that you guys should be paying attention to. One is when you have these momentum stocks that you're watching, always pay attention to the float short percentage. If you're a new trader, you might think, oh, well, if this many people are, shorting a stock, it must not be good. But actually, when you see these big float short percentages, it's a good thing, because if there's some news that's good or the price starts moving bullishly on these stocks, shorts start covering and it creates a short squeeze. And you can see here, I really pay attention. So this 40 stocks that we've got here, Focus 40, there are about 10 of them. We'll say 7% or higher, or 7% is higher. So maybe 9 of them, 7% or higher, that have heavy short interest. Pay attention to these, because these things can really run when they have heavy short interest. Notice these two, Hims and Sizzle. If you look at Hims has a heavy short interest, and look at how it popped on after earnings. A lot of this, one is good earnings. Actually, it didn't have the best earnings, but it still ran. But two is shorts get covering and getting squeezed. So, this thing was just 5 days ago at 38 and now is at 51. And SEZL, which Dennis was asking about, same thing. Huge run up. Part of this is a short squeeze. IONQ, also one that we're watching very closely. And this is quantum computing related as well, has a lot of shorts as well. So pay attention to the short numbers, pay attention to float size. And then if you go into valuation, the stock, now we're technical analysts, we look at the charts, we look at momentum, right? But the stocks that tend to be strong momentum stocks, not just for a quick pop on some news, but actual momentum stocks, will have good revenue numbers, so sales, or EPS growth numbers. So pay attention to pay attention to these. Notice for most of the stocks that we're watching, these numbers are much more green than red in here. That's because momentum stocks tend to have very good revenue and earnings growth numbers. So look at your short interest, look at your float sizes, and then look at the growth numbers as well. And that will give you a good indication of which stocks are primed to be good, strong momentum stocks. All right, that's what I wanted to go over with you guys today, and I'll answer a few more of your questions here. So if you got any questions, post them here. You guys know that I run the swing trading service at Bulls on Wall Street. You can do a 14-day free trial here. I'm going to post that link here if you guys want to do the free trial, or you can just join. Next week when we do this, we'll give you a little discount code as well. And then here is the chat room for that. I post a video every day, and then we also do pop-up sessions 2 or 3 times a week that are a lot like this, where we go over the market, stocks we're watching, Q&As, and so on. All right, let's take a look at your questions. Thanks, Brent. Brent says worth every penny. Brian's got a good site. Short, what is that here? Yeah, there are a lot of sites that will give you short interest data. Okay, let's look at Crocs here. That would be specialty retail, an area that's starting to make its move. And you can see Crocs had a very good earnings breakout after some negativity here. I'd wait for it to remount the 200-day moving average, but I think you could definitely be watching this one. QTWO, really nice here. Software application. This one has not been on my radar. Do you happen to know? I'll investigate it further. But do you happen to know what area within software that it's in? Low floater is back up over the moving averages. I really like this one. I'm actually going to put it on my now list here. All right. AP is asking, how often is short float data updated? 2 times a month. Yeah. So when you're looking at float short data, you don't have the exact number because the SEC requires companies to report mid-month and at the end of the month. So you don't have the most accurate information. Guillermo, what's going on? Guillermo's asking about Uber. Uber has been very strong here. And you can see I have this one setup we trade is the box breakout. This qualifies for that. The box breakout requires strong momentum before a range that forms over a few months. And then also strong revenue and earnings growth. And Uber has all of those. And then we wait for the break of the box. And it has recently done that. So I like Uber a lot here. Chucky is saying, I thought Apple was um, exempt from potential tariffs. Yeah, maybe they've got some things in their favor. I remember hearing some rumor about that, but I don't think I don't know if it went into effect or not. But it's pretty obvious that Apple is getting hit by some of this news. Shortinterest.com is a good site to look at the short interest as well. Thanks, Brent, for that. I do like APRDDT. I would watch for it to remount the 200-day moving average. Richard is mentioning that U.S.-China meeting this weekend cosigns with SPY almost at the 200-day moving average. Yep, and it'd be fantastic if there was some news that got it over that level. And then Brent says QTWOs in software app. Yeah, it's in software application, but a lot of the software application stocks are related to some specific industry like quantum computing or AI and so on. I'll take a look at that. Okay, Carter mentioned digital banking, which has been strong of late. All right, guys. So great session as usual. We'll do another one next week. And remember, again, you can join the swing service here. And if you have any questions at all, whether you're a member or not, singjd1@aol.com. Go to Bulls on Wall Street's blog. There's some good posts that I've posted and others have posted as well. And I'm going to be posting some more there. And my own site, Paul J. Singh, as well. All right, guys. Talk to you soon and have a great weekend. Bye-bye.